Hello guys, and welcome back to the Part-Time Investor. It's been a long time since I've made a video. Life just got in the way, had a kid, not me personally obviously, but you know what I mean. Ended up catching coronavirus. Luckily, touch wood, that was only mild symptoms, and got busy at work and was lazy and just didn't make any videos for about 4 months. So I'm back, and hopefully I'll keep on making some videos. I've set myself an aim for this year to get to 1,000 subscribers in 6 months. So if you are new to this and you like this video, please like and subscribe. It'll really help me out. And I've also just bought a new laptop, so I really do need to make some money back on this. So today it's just going to be easing myself back in. Just going to be doing a quick portfolio update, given that's been 4 months. So I might just jump in and have a look at the portfolio as it stands. So after about 9 months of investing, I've currently invested a total of £7,668 and currently sitting on a return of 12%. So that is £920. Not bad for 9 months. It's not, fantastic growth, but I'm not aiming for crazy growth. So I'm very happy with that. If we now have a look at some pies, now I haven't actually used the pies that much. I'm just using them to kind of split out some of my stocks to see what's performing better or worse. As you can see from this, I've also created some other pies that haven't put anything in yet, like cyclical and growth. And that's because I've been reading a couple of books, including One Upon Wall Street by Peter Lynch. Peter Lynch is kind of like the Warren Buffett of growth investing, really. Quite an old book. I think it was written in kind of the late 80s, 90s. So you're going to have a think around some of his explanations, but in terms of trying to understand where growth is and value and that kind of thing, I'd recommend it for anyone who's kind of beginning their journey investing. But I've not put anything into those pies yet. So if we have a look at kind of the 3 areas that I split it out into at the kind of start of the year, really, we've got the ETF pie, which includes quite a few ETFs, and I'm really looking to reduce them down really to probably 1 or 2 max. I've got too many ETFs, but they're currently up 10.52%. Again, not bad. Then you've got the free shares. So if you join Trading 212 and you use the link in my description, or any link from anyone's description, but please use mine, then you'll get a free share worth up to the value of £100, and so do I, and it can be up to the value of £100 because I've received an AstraZeneca share, which was about £95, so you can get them. Normally you'll get ones that are worth about £10, something like that, but it's free money if you want to start investing. Again, don't go off what I say in terms of the broker you should use. You need to do your own research. I do really like Trading 212 at the moment, especially for someone who's beginning their investing journey. Maybe if you've got a lot more money, you might want to look at some of the bigger brokers. I don't know. But as a kind of beginner, Trading 212 is a really good platform to use. Anyway, so we've got free shares, and they're just kind of randomly picked by Trading 212 out of a selection of, I think they've probably got about 10 or so, and they're up 10.24%. So I've not done done anything to those. I've not bought any more. I've not sold any, and that's pretty much led the way by Under Armour, which is up 59%. It's not a stock that I would have bought, but it's up 59%. It's bringing up a Smile Direct's also up 17.75%. I've only recently just received that, so there you go. Thank you for all those people who use my link. It's earned me £219, and it's currently up 10.25%. So pretty much exactly the same as the ETF. And then we've got my stocks portfolio, which is currently up 14.71%. So I'm currently beating the market from the ETFs that I picked anyway, which is quite heavily stacked in America, but also it's got the FTSE and that kind of thing in it. Okay, so that's the pies. I don't use them a lot. I'm also going to make a video on my thoughts on the pies, so keep an eye out for that. But if I just show you my investments and go through it. So if we go and have a look at the investments, my most recent purchase is in Alibaba. I'm really quite bullish on Alibaba in the moment. I think it's pretty cheap for the growth that it's showing. If we go into it a little bit more detail, again, I'm not going to go and kind of micro analyze these stocks. It's just a very brief overview, but you can see that it's currently got a PE ratio of 30. Actually, based on its current price, it's lower than that. It's a growth stock, so it doesn't have a dividend, but we have a look at kind of its income statements. Very good over the last 4 or 5 years. Again, balance sheet, debt to assets 41%, so nothing to worry about there. Now, you are investing in China if you invest in Alibaba, and also you're not technically owning the stocks because of the way China works. However, and there's been a lot of bad news around Jack Ma and all that kind of things. One, do I think China have killed Jack Ma? No, not a chance. He's just been told to shut up and hide for a bit. Do I think China are going to torpedo one of their biggest businesses? No, not really. So while some people are a bit afraid, and that's why the price has gone down by about 30% recently, if you have a look at, was it last 3 months, last year? Yeah, you can see the price has dropped quite dramatically over the last year, 4 months or so. That's going to pop back up. Well, I'm betting that it is anyway. I'm getting in while the price is pretty cheap, as far as I see it. If you want to think, if you don't know about Alibaba, you can kind of think of it like the Amazon of China. It does quite a lot of the similar things in terms of the e-commerce, and it's also launching cloud services and a few other services that are actually growing quite well. And even if Alibaba doesn't really go outside of China, which it does in terms of especially a lot of businesses buy from it to buy out stuff from China, there's such a massive market in China in terms of its growing middle class. So it's got a fair bit to go, I believe, anyway. So that's my little review of Alibaba. If you want to kind of look into it a bit more, and again, I would never suggest buying a stock just based on what a YouTuber says. In fact, definitely never do that. But Sven Carlin's YouTube channel has got quite a good breakdown of Alibaba. So if you want to have a look at that, go ahead and look after you've watched this video all the way to the end. American Express, that was the first stock that I bought, and that's currently up 36.65%. Don't need to tell you much about American Express, credit card company, that kind of thing. AstraZeneca, that's one of my free shares in there, and also it's down 14.25%. Now, I kind of bought it, if you have a look, you know, right at the top. So it teaches you to try and jump on the bandwagon. Now they have got kind of the world's vaccine. The other vaccines from Moderna and Pfizer need to be chilled to like -70 when they're transporting and things like that. So really only rich countries can use that vaccine, and even then they can use it in like hospitals and that kind of thing. So I think that AstraZeneca's vaccine is probably going to be the one that ends up getting used by the vast majority of people. However, whether that's already baked into the price, I don't know. I'm just hanging on there until it returns at least something. Let's go back and have a look at Bellway. That's my construction company stock. It's UK property builder, up 20.22%. Very nice. It's also got a decent dividend. Boohoo, growth stock, online clothing company, up 25.54%. Again, I bought that on a recent dip based on some bad news from Boohoo. I think that's not a bad tactic sometimes, where it's a strong company and there's something in the news that kind of knocks a bit of investor confidence, but really it doesn't affect the company's profits in any way. It's not a bad time to buy into a company. Carnival's one of my turnaround stocks, up 55%. You know, pretty decent. That's really all on sentiment based on the vaccines and things like that. You know, no one's going out onto a cruise anytime soon. I might end up getting rid of that at some point, I don't know. Delta Airlines, again, another turnaround, up 43%. And EasyJet, I'll skip Jeju just for a second, up 43%. So those travel stocks have done, you know, pretty well for me so far. But I probably look to condense down until maybe one. I don't need three to be looking at. Diageo, big drinks manufacturer, up 16.28%. General Electric, free stock, so not going to look at that. Intel, I did make a video about value investing and why I bought into Intel, you know, 4 or 5 months ago. If you want to have a look at that, please do. That's up 4.29%. Slowly growing, but I will take that as an option to keep buying into it every month or so, and hopefully once the market sees that, you know, the great cash flows, it's investing so much into R&D, double what any of the others do combined, although it is losing market share to the likes of the AMD and all that kind of thing. Then we have looking at iShares Physical Gold. That's just a gold ETF to track the price of gold, minus 3.22%. That's a hedge really, so if the market drops at any point, you potentially see that rise. I'm only going to hold a small proportion of my portfolio in that in any one time, so not too bothered about that. iShares Information Technology ETF, that's the S&P 500, and it's very focused on the kind of IT side of that, so it's kind of weighted towards the tech companies in that. I think I'll probably get rid of that at some point. It is up 10% now, but I have a little fear that the American tech side is slightly too overvalued at the moment, and there could be a pullback, so that might go when I reduce my ETFs down. Norton LifeLock antivirus company, currently up 4.46%. That's been all over the place since I bought it. That was one of the first ones I bought alongside American Express, which is up 35%, so it's not done anywhere near as well. This is one that I may potentially get rid of, unsure about it, and I might end up selling that and buying some more Alibaba potentially to reduce my portfolio. Rocket companies, I did a video on IPOs and talked about rocket companies in that. If you want to have a look at it after this, you can do. That's down 5.39%. I'll just keep buying into that. Royal Dutch Shell, another bit of a turnaround. That's currently up 24%. When that was down, which was down for quite a while, I just kept on buying it, increased my share. And yeah, it turned out right. As soon as that vaccine news came out, there was a big bump in Shell. I'll probably hold that for quite a while because it's got a decent dividend and I bought it quite low. So I'm probably not going to buy too much more of it at the moment, but I'm happy with it at the moment. Smile Direct is a free share. Under Armour is a free share. Unilever, big multinational seller of consumer products that you probably buy in the supermarket all the time. Up 3.66%. That may be another one that I end up selling at some point to condense my portfolio down from listening to the likes of Warren Buffett and Peter Lynch, those kind of guys, you know, the kind of godfathers of investing. Really, you don't need to have that much. A diversified portfolio really is only there if you don't know what you're investing in. So I want to spend more time researching a couple of companies that I'm very, very keen on and know the ins and outs of, and can put a lot of money into, rather than spreading myself out too thinly. So that's going to be my tactic over the next year, is to kind of condense my number of stocks and also the number of ETFs. I'm talking about ETFs, we'll go into them. We've got the Vanguard FTSE 100, recently had a nice kind of kick based on the virus news and that kind of stuff. So that's up 12.64%. When I say virus news, I mean vaccine news. Then we've got the Vanguard FTSE Emerging Markets. That's heavily invested in China, as well as a couple of other things. So that's up 13.55%. Again, pretty nice gains. Vanguard Global Value ETF. So that's my only actively managed ETF based on global companies that Vanguard believe are value, and that's currently up 7.8%. Value stocks over the last, 9 months or so have really not done anything compared to the big growth stocks that we've seen just absolutely explode. But that means there's still value. Now, in fact, value over the last 10 years hasn't done very well. But 7% since I bought it, a couple of months ago, I'm pretty happy with that. And I think there might be a pickup in value just based on, you know, growth stocks can't just keep going up forever, or, yeah, they shouldn't do. And then there's got to be a pullback somewhere. Personally, that's what I think anyway. And then we've got the Vanguard S&P 500 ETF, which follows the S&P 500, and that is currently up 11.5%, just because the American market has been doing pretty well. Last couple, we've got Visa. Everyone knows what Visa is, up 7.2%, and Walt Disney up 58%. Obviously, I wish I'd bought more of Disney when it was below $100 a share. I'm thinking, again, how much more growth is there in the near term with Disney? Am I going to be able to kind of add into that anytime soon? Maybe not. I mean, I have Disney Plus. I think it's a great service, especially with all the Star Wars stuff that they'll be releasing over the next couple of years. I think there's growth in that, but it's all priced in now, I think. So I might get rid of that again, put it into maybe my Alibaba or something else where I think there's much more growth potential, potentially. So that is my current portfolio. Pretty happy with it as it goes. I'm going to be doing a video about kind of where I see it going and what I want to do in a lot more detail, because I've now set kind of a goal, a long-term goal that I want to reach, and I kind of know how much I need to invest each month in order to get there. But for now, thanks for watching. Please like and subscribe again. I'm trying to get to 1,000 subscribers in 6 months, so any help you can offer me, very much appreciated. Anyway, I'm rambling. See you later.